What's happening, guys? Welcome back to another Sunday scan. A very volatile week, especially on Monday. We had the NASDAQ down about 6% at one point. We had lots of markets crashing. Japan was halted down at one point. So just a very volatile week. And last week we went over really the reasons why that was. So this week we'll do a very quick recap on that, but then I'm going to get into some of the recent runners from the last week. And then later on, we're going to bring on Judah to go over some watches for the week ahead. And just how to navigate this market when it's down 2%, it's up 2%. It's very volatile, and I think just the theme of like surviving a market like this or capitalizing on it is just patience, and it's really just it's recognizing when your setups are there with edge and then acting on that and just kind of blocking out the rest of the noise. And it can be difficult sometimes because when you have these large moves, it seems like there's always a setup happening. But that's not always the case. Just because there's large moves, they need to be large moves that fit into a setup that you can predict and that you are understand, and the risk reward to it. And that's really where edge comes from in trading. It's not just jumping into a large move because it's happening, but it's jumping in a way that you're comfortable with and that you have a plan for. And so we'll get over we'll go over some of that later on in scan. But to start things out, we'll just review SPX or SPY. You can see, large flush and gap down here, and we had some reversals later on in the week, and now it's just kind of coming back up to this, kind of these key points where, what happens now? We talked about the variables with Japan, and they kind of reverse things. We talked about things with the Middle East. That's kind of been stagnant. Some of the economic data got a little bit better. We had some other readings, so that is a little bit less concerning. And then we had some moves with bonds as well, so I'll get into that in a moment. But yeah, you can just see the range of these moves is staggering sometimes, and you just want to make sure that if you are playing a range or if you are playing a move, just to have a fixed area where you know that you're wrong. Because otherwise, if you just try to let something work or if you just hang out, if you're on the wrong side with range like this, you're going to get chopped up or worse. So definitely just have hard areas where if something is not working, then you are out, and that's a big part of recognizing good setups, especially if anyone's playing SPX or SPY options on some of these moves. TLT, this was one that we talked about last week, looking for that mean reversion trade. And this was one of the big things that I took a piece of this move, but I definitely did not perform as well as I could have on it. There was lots of options on this over the course of the week that went, 10, 15x, and I only made it for a very small amount along the way. But kind of the whole theme and the idea behind this was, while fear is very high, a lot of times people will pile into bonds. And once that fear subsides, it's similar to the VIX, where, if there's a lot of uncertainty, a lot of volatility, a lot of range, the VIX gets bid up. But then as that starts to kind of unwind and the fear subsides a little bit, you have that big mean reversion. And it's the same with bonds when they're acting like this. And I bring this up because a lot of times when you have kind of like mini panics or things, bonds can actually be a cleaner way to trade some of these moves, even though they're affecting the stock market a lot. And so, some of these products like TLT or like these ETFs that track bond prices, they can sometimes be a very smooth way to play a big move. And so that's why I want to highlight it this week. So you can see, as the fear was kind of ramping up, this was like the peak buying into the bonds. And then, you kind of have that classic failed follow through setup. And then once the market started to recover, once the VIX started to, drop a little bit, this was just a much easier way, in my opinion, to kind of, capture some downside on that, because you can have a very smooth unwind. You see, there's not a whole lot of headaches along the way as it kind of ramps back to, or as it drops back to where it came from. So that's like a very clean mean reversion types of trade that I like to focus on, where I kind of understand what's going on the macro side. And then it's really just what is driving this? It's fear driving, some of the bond buying. And once that fear subsides, then that's a very clear way to play that downside. So puts on TLT was a great trade this week. But like I said, there's definitely a lot more opportunity than I stuck around for. But just keep in mind for next time when you have these types of panics, with bond buying acting as that proxy, and then it can kind of subside. BYND, this was a very interesting one. This one ran on Friday, and part of the reason why this ran was there was a whole bunch of call options bought. There was, thousands of them, maybe tens of thousands, kind of out of the blue. And these names are interesting because these are like the high short interest names that are, they always have high short interest, and for good reason. But these types, it's kind of what I call like stale short interest. So sometimes you'll have these names that have 40% or 30% or 50%, and it's just kind of like swing shorts, in this stock for much higher prices, and they're just kind of riding it down till this eventually, goes to who knows where. But when you have those names where it's a Friday, it's low volume, and you have these like packed short interest names, and they have some kind of catalyst set them off, you can get some really good range on those. And this one went from 6 something all the way up to 950. And the calls went, 50x or something like that. So it's good to be aware that, if you're familiar with which names have very high short interest, and it's names like this or even like UPST or things like that, when they have something set them off, they can really move a lot because the volume was low, and then you have some kind of catalyst, you have the volume come in, and then you have the volume from that cover come in, and that's how you can get those big squeezes. And then, they fail to follow through, and they go right back to where they came from afterwards. But that was just an interesting example from the week. And you can, keep your eyes out for some of these plays, especially on slower days in the market, because sometimes these can offer, really quick opportunities almost out of the blue. But if you're prepared for them by being familiar with which names have very high short interest, or like what is like a powder keg that someone throws a match into it, and you can kind of assume it's going to have explosive range on it. LUMN, this was a very popular one this week, and this was on watch to see if we could have a kind of like that perpetual squeeze or a secondary squeeze kind of move here. And so, this was a name where we've talked about these channels before, where you have a big, ramp up. Doesn't matter what the catalyst is. Could be earnings, could be a press release, could be something. As long as it's not absolutely fundamentally different, and most of these things are not. They might have something positive in their earnings that sets it off, but for the most part, these are not super sustainable reasons. But when you have those big ramps up, big volume, and then they start to consolidate in this channel, it becomes really a game of who's more offsides, longs or shorts. And, if you have something staying in this channel and it keeps swiping up towards the top, and keeps stuffing down, and it holds this range at the bottom, if that holds up and if that continues most of the time, or a good amount of times, it will result in a squeeze out if that bottom holds, because eventually it'll start to grind up. Shorts will get offsides, they'll have to cover. And, you had some examples. It's not exactly the same, but kind of like NUZE or some of these other ones. But this was much higher volume than NUZE. So it's not, and this was also a larger market cap. So not the best comparison, but like the shape looks similar. But a good thing to remember with something like this is that you just have to know, where are you wrong? When does this go wrong? And where are you getting out? Because with some of these trappy names, a lot of times you have like a weak open or, other things. It flushes down, but it always catches and it soaks right back up. But if you're used to like looking at that weakness, you want to make sure that when the stock is actually acting weak and following through on that weakness, you're not just expecting it like, oh, this is just trapping again. It's like, no, it's actually just breaking down. So making sure that you have a level to kind of keep you on track. And Nate gave some great levels around that 640 area. And then, below that, it started to get a little bit weaker. And then you could see when the volume came in here, that's when it really started to break down. And, that's like a move of like relative weakness when you see it breaking below key levels and then you have volume starting to come back in. And it's not like super choppy or trappy up and down. It's just like selling, like someone is offsides or a big seller is getting out of there, or, some short interest. That previously blew out, or some shorts are helping that down as well. So that's like very clean downside action. And this setup, if it doesn't work out as a squeeze, can actually be a great, failed breakout kind of strategy, where you just have to know the bottom edge of this channel and the top edge. And then when one of those breaks, to know that someone is going to be offsides, and then it should have some decent range And then again, on a higher time frame, if this sets back up again, like if this starts to do what this did, but it follows through, we could have a secondary move. But if it starts to do the channel thing, and then it starts to break below this level again, you could have a repeat of this as long as the volume is there, and you could have a clean unwind. HUGE, huge move, every pun intended there. And you could see Nate was really warning about this one in the room, just to not exhaust yourself out on the front side. Like, for people who are shorting these types of moves, it's just making sure that you're marking where the key levels are along the way, paying attention to when the volume profile changes, and then you potentially have the backside of the move come in. You have an area that you can risk off of, and then you're looking for those swipe tests and for it to act heavy and for the volume profile to really, act like the backside of the move, where you have that blowout on the front side, peak volume, everyone gets squeezed out, and then it still can't follow through. And it's like that was the peak buying, the peak demand of the move. And then when that's done and it's starting to act heavy, then the odds are that you have a very clean unwind, and that's exactly what you saw in a name like this. And then Sava, kind of a similar situation, just on a larger time frame with a larger stock. But you can see big ramp up, and this was the same thing, holding those higher lows along the way, and then you finally have that like capitulatory volume, and you have all the short interest get blown out, and then you start to have longs chasing it, and longs are accumulating. But once it starts to basically be at peak bullishness and it fails to follow through, then using those lines or taking note of those areas along the way, that can help you on the way back down. And once it starts to slam down, fail to follow through, you can be pretty confident it's likely on the backside. And who knows, maybe it retraces all the way, but you have to use those key levels to kind of be as markers along the way, to be like, okay, I'm going from one to the next, and if I retest one, that's okay, but I don't want to start going in the other direction. So those are just a few names on watch or recapping for this last week. And then the final one is just Palantir, PLTR. This was a good earnings winner. They reported strong earnings, and you can see that this one has really been building for a long time. And if we go to like a higher time frame, this has been setting up, and we're at about a key area on the stock. So what you really just want to pay attention to with some of these is, it is very market sensitive. So if the market holds up and this is having a breakout, there's a good chance that this follows through. But if you're at a key level and the market starts to act a little bit weaker, then it's going to be really difficult for this to break through unless it has another fresh catalyst. So I'll get into this one a little bit later on the main watches, but Palantir has been setting up for a long time, and I think it's finally starting to be at a big decision point where it's either going to have a massive breakout and follow through, or it's just going to kind of stuff into this level for a while, maybe a few trades or flushes off of it. But even then, eventually, I think it has a good shot of breaking through to the upside. So those are just a few names that I want to go over from the previous week. And now I'm going to give the disclaimer before we bring on Judah. So neither Judah nor I are financial advisors, and these are not buy or sell recommendations. This information is for informational and educational purposes only. Now let's go talk to Judah. All right, we're joined by Judah today. Judah, how you doing? How was your week?
Doing good. How was yours?
Good, good. Yeah, I'm excited to hear some of your market thoughts, and then go over a couple of the main watches for the week ahead. I know that it's been pretty chaotic in the market. Lots of 1-2% swings in things like SPX or SPY, up or down, and that was much more in the first half of the week. And then the second half of the week started to ramp a little bit higher, started to get a little bit choppy with some of the individual names, but there's definitely some things in play, and we're looking forward to getting into that. So
Yep.
what do you have on watch for the week?
So yeah, like you said, I mean, it's been a pretty choppy, I guess we could say, past couple of weeks. We got off the top this sell off. It gives a little bit of a relief bounce, then we get a gap down, and the same thing, and then another gap down, and this was pretty much our we could say third or second gap down, and now we're just slowly grinding up from there. And right now, I think what we need is a little bit of consolidation. Just go sideways for a little bit, and that would give more confidence for that leg higher. But otherwise, we have this little this little trend here, this little channel that um, we I think it would be good for us to just consolidate. Otherwise, we could see that crack and potential fourth or third leg lower. So hopefully we consolidate for a little bit. I mean, it has been a bit choppy lately. So the watch list isn't, there isn't much, but Net had earnings last week, I believe, and it's kind of sold off and then pulled back into range, and now we're just tightening up. So what I'm looking for is just any perk or break out of this level here, 78, 78.50s. Maybe we'll get that leg higher. So Net is one of them. Then we got TNX, which is just putting in these inside days, looking at it as kind of a liquidity trap type setup. Like you talk about those wicks that get sold off, on the day two, day three, and every time it goes up here, the shorts get more involved and it just hasn't broken down. And now today, we're just kind of still hanging around and putting in another inside day. So, any build over there, I mean, volume is really dying out now. But if it could, pick back over 425, 430, maybe we could get a continuation on that. Serve, I'm just looking for, some sort of bounce over this 14 level, 14, 15. If that could reclaim, maybe we'll get one more push before it fails. Otherwise, this level here, 13, is pretty key. And if that fails, then maybe it just rolls over. But I'm looking for some sort of, 14 reclaim and build. Then we got LPSN, which is just a complete technical setup that's just tightening up here. We got this, this 180% grind. We pull back a little bit, tightening up. If we could build over that 130s, then I'll be interested in that. And then Sava, I'm just looking for, maybe one more day of selling 1820 reclaim and some sort of bounce within this area here. So far, off that top, if it could get there, would be, about 50, 55% off the highs. And maybe we could get some sort of bounce. Otherwise, I won't force it because this thing has had some, some crazy moves and drop offs in the past. So I won't force it. I mean, this move alone was huge, and now we're kind of giving it back. So if we could get that bounce, then I'll be interested in that. And that's pretty much all I got for the week ahead.
Great. And then if you could pull up LUMN, this is one I wanted to review a little bit. And this is one that I was looking for a continuation, potentially long. And if we could get a little bit more of like a granular view or like 60-minute candles, I want to walk through like when one of these setups, doesn't work out. And so, we had talked about like these channels where it goes up and it tests that upper end and it kind of rejects and it tests that upper end, rejects, and you can have more and more shorts piling in as that happens. But also you can have more and more longs anticipating a breakout getting in too. And so you never exactly know which is a little bit more crowded, whether it's more short crowded or more long crowded. But Nate had some great levels on this one at that like 640 level. And so, we talk about like if you're going to enter something like this, it's you enter in at the lower end of the channel, more like that 640 area. And then you anticipate if it builds, then it might break out later on. You could add in once it crosses over like that 730 level or something like that. But it's important to realize that if you're waiting for something to basically be in that channel and then break out and it starts to get below that lower end of the channel, then that's a big sign that it's, you have to cut your loss there because your thesis was, it's holding within that channel, collecting shorts. But if shorts are now in the money and they have a buffer and longs are offsides, then you can get some big unwinds on that. So I just wanted to go over one of those setups of what happens when one of these doesn't work out. Because we've had some great ones like NUZE, ZAPP, IVP, I believe. Like there's been a lot of these that have been working. And so just to have a strategy for when these don't work, you can either use that, 640 area as kind of like your risks on the long side, or you can also use it to flip your bias. And so if you were more long biased on it and it starts to break through that and then retest, then you could flip your bias to maybe a short bias with either puts if they were reasonable. These ones were pretty inflated, or shorting straight up if that's part of someone's strategy. So
Yeah.
on a larger time frame, this is still holding somewhat
Yep.
of a higher low. And so if the market bases and this grinds back, maybe it'll be back in play. but you kind of assume it's on the backside now, especially if it swipes up and stuffs. But I
Yeah.
just want to go over that example.
Like Chris, even if yeah, even I guess on Monday, I mean this thing could curl up, but if we do get, one more pullback and it's lower volume and we could actually base here in these 420s or even fours, then I mean it's possible that we do, get a bounce. I mean, the volume is still dying out, and I feel like as long as, it doesn't lose specific moving averages and completely break down, there's always still a play for a bounce. I guess depending how big your time frame is or how short and little. I mean, this thing is, yeah, on a bigger time frame. I mean, there's no clearer direction here. I mean, it's pretty much in between, this range here from 360 to this 780. I mean, we're just right in between that. So it's kind of flagging at the moment, and either we could get that curl up on Monday, or we get one more breakdown, soak this moving average here on lower volume, and then get that maybe fourth day bounce.
Yep, and the same process can kind of set up where it's if it's in a new range now where it's maybe 5 on the lower end of the channel, and then something like that 640 at the upper end of the channel. You could have the setup reset up, but only if it proves that it's actually doing that and not just for trying to force a bias. We have to listen to the action. But yeah, this will definitely be on watch for the upcoming week to see if that resets up. Otherwise, if this is done, then let it fade back to where it started from.
Yeah, it's
Um,
kind of like over here. I remember on this day before the press release came out after hours, I was saying that tomorrow I'm going to have this on watch for that bounce because we get this huge grind and then we get this 3 day sell off. And here it was just hanging around. And then after hours, I mean, it made that big push, and earnings was the next day. So everything just fueled itself. But that's pretty much what I, look for when the backside's in and it gets that, 3 day or 2 day pullback in between. You get that fourth day bounce sometimes. And between the press release and the earnings report, it fueled it a bit more. But that's kind of the same idea I'm trying to get here. But it's pretty much the secondary move, so I won't force that one either.
Yeah, for sure. Okay, so the other one that I have on watch for this week is PLTR. This one was an earnings play from this previous week. It had very solid earnings, gapped up on that. It was pretty volatile both ways. This is one of those names that tends to trend with the market a decent amount. So, if the market is really tanking one day, this tends to follow it. It's very sensitive. But if the market's bid and it has good news, then on a higher time frame, we look like we could be setting up for a breakout. So I think that this is a market to really just have a plan for two scenarios for most of these names. Because when you're having 1 or 2% index moves, no matter how good an individual play is, if it's going to be affected by the market, then you need to have a plan for whatever the scenario is, especially in this kind of headline driven market. So if the market continues to kind of squeeze up and recover from the big dip over the week, then I think that this could be a top name for some more upside. But if we kind of have a strong open and it starts to stall out and the market totally flushes, then I would have no problem looking for something like puts on this to ride back some of the move and then wait for it to set up again. And then on to the next name. We have SMCI, and this is one, the whole AI semi sector has gotten, torn apart over the last couple of weeks. A lot of money's come out, a lot of leverage has come out of this, and that's, a good thing. It's kind of expected with some of these sector trades. They run for a while, they have the whole narrative, you have some good fundamentals in, but then after a while, you have a lot of, like weak hands that kind of accumulate this over time. And sometimes the fundamentals aren't as good as they were before, or it was overhyped. And so you just have a big unwind and things like that. But you have some good bounces along the way. So um, SMCI will be on watch for me for a possible bounce if the semi sector kind of bounces, and things like SOXL are another way to play something like this. But I'm looking for some of the names that have been hit the hardest over the last couple of weeks, and then when you eventually have the turn in the market, or if there is a turn in the market, then I'll be looking for these for some of the bigger bounces if they're if they have more short interest in them and some more downside positioning that can get offsides once it goes far enough. And then for the next name, I have UPST, and Nate has had some incredible trades on this one. He's had a great read, and this is one that reminds me of like the CVNA types, where it's kind of like these mediocre companies, turnaround stories, but they have an earning surprise and they catch a lot of people off guard, and they kind of just they gap up and they grind and they soak dips, and they eventually have a blowout, and they usually have like high call volume interest associated with these moves. And so, as long as this is holding dips, we could have another couple retests of that 40 area, maybe a little bit more. But once this eventually kind of gives out, I'll be looking for some downside on this. And maybe it will be related to the market. Maybe it just has to get overextended enough. Maybe it's one of these names where you have a big option run into a big expiration, and then you have like that Thursday, Friday mean reversion trade. So, this has a lot of range. And I think it could set up for some potential, good trades. But we just have to see how it plays out. If it gets overextended enough, mean reversion. But if it's just kind of like dipping, soaking, then you could have some more upside in it. And then the next name is Meta. So this was on watch from last scan for relative strength, and you can just kind of see, like, even as the market was pulling back, a bad market or a down market will pull most things down just because liquidity dries up and market sensitive names, they're in the index, they're going to get sold off. But look for the names that have, a good catalyst or a reason to go up. Like this had very strong earnings, and then look for what is constantly trying to like it has the most shallow dips of the other names and is constantly trying to like move its way back. And those are the ones that show relative strength. They hold over VWAP. They get good volume in them, and they start to creep up towards the highs. So I think if the market does start to recover over the next week or 2 weeks, then Meta probably has some more upside. But if not, if it stalls out, then again, have a plan for both scenarios. And then the next name that we have is NVIDIA. And so I talked about last scan how the last regime was basically buy any dip in Nvidia and it works out. And with this one, I want to be a little bit more patient with buying the dip because you had a lot of people who were buying the dip and they kind of got off sides. And so just like a lot of different stocks or names need some time to consolidate and reset, I think that's really the case with Nvidia. And I think that we could still have like one more maybe panic flush in this. But otherwise, I think it'll just kind of need to consolidate and grind for a little while before it picks the next direction. But if the semis are going to bounce, then this will likely be one of the leaders in that. But if we start to stall out a little bit and the market gets weak again, and this is a vulnerable sector, then again plan for two scenarios. And I would be open to trading this with either calls or puts. And you have that kind of key 100 level on it. And so above it, it's kind of grinding, consolidating. But below that, I think it really goes risk off, and you could have a flush to maybe 90 or maybe even a little bit lower. But you would need the market to agree with that, not just this individual name. And then was there one more in there?
I think that was all.
All right. Well, great. Do you have any other comments on that, Judah, or any other names?
No, everything sounds good.
Well, great. Yeah, so that's pretty much what we have on watch for this week. Judah, I appreciate you coming on. And again, I think a lot of it in this market is just being patient, waiting for the setups to form. Because in a market that's very choppy and very whippy to the upside and the downside, you can have both groups being offside. You can have longs and shorts just kind of all muddled up in the middle, and there's not like a clear setup or a clear direction. So just wait for the setup to form, and then for myself, it's a lot about patience and just finding what works for me, and then executing to the best of my ability.
Yeah, I mean, you just reminded me. If you just the tickers that you're looking at right now, just go like a month, 2 months, 3 months in the past, and just see how it looked then versus how it looks now. There's so many more setups, and I was looking at it with NVIDIA now. Like the setups that we're trying to find now are nowhere near what it looked like, especially back in January, and along the way there was some great setups. Like that's what you really want to look for. Setups like that. You don't want to force things that are happening now. So if you just look at these setups on the other side a few months back and like you realize how good those setups were and how it compares to now, like you need that patience to really, continue profiting to the upside.
Yep, because otherwise, if people try to force things, then they're going to be exhausted by the time the good setups actually, come back into their wheelhouse, and then they have to, size down or do other things. So yeah, that's a great point. Okay, well, yeah, I hope that everyone has a great week ahead. Remember to like and comment. And then there's also a new episode of Trading Takes that just dropped. It's an options episode, and we have some very interesting guests on there and talk about different option strategies and how the options market affects the equity market, and then how some of those like home run trades on like the Nvidia puts or some of those big gamma runs up and then the slams down, how you can capitalize and maximize some of those trades. So lots of good information in there. So go to the latest Trading Takes episode. So yeah, Judah, thank you, and I'll see you
Yeah,
in the
thank
room.
you. Thank you.